The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the second day of September. Fed came in, the jobs report came in, disappointing. I'll tell you my whole scenario. We'll just go through it. Let me just run the numbers right away. The Dow is up 90 at 18,510. The S&P is up 10 at 2181. The comp index is up 26 at 5253. You've got gold. Gold had a big spike. Now it's only up about 5 at $13.22. Dollars now up. It was down. It's up 20 cents at 96.86. Crude oil, the last I looked, let me just check this little thing right. Where did it disappear? Right there. So we've got crude oil. So USO is up 17 cents at 10.23. All right, so crude oil's up. And the S&P, there's the 5-minute chart, just pulling back a little bit here. As I said, I'll go through the scenario. Most importantly, what we want to be looking at here is what happened to bonds. And the TLT is down at the lower level. It's making this arch. It's broken. No, it hasn't. It's got that right there. It hasn't got to the key level of 138. Excuse me, 138.80. So let's call it, no, it's at 138.80, so that can't be, I must be 137.80. So at 137, breaks 137.80, something else is happening now. This is going to be really important because when I'm looking at the TNX, and that's the 10-year, that's really probably one of the most important yields. The 10-year yield is trading at 16.14. It broke a few days ago the downtrend line. So now that downtrend line has to be moved, and now it becomes an uptrend line. And that uptrend line says if the yield is going to take out the previous high of 16.35 made on the 26th of August, then probably it's going to go to 16.50. It's already in leg B up in the weekly chart. This is going to be fascinating. We'll go in a moment. We'll go to my triple yield chart, but I did add yesterday the TU. TU, I think is a TU. Oh, yeah. Excuse me. The 2-year Treasury note. Uh-oh. Beginning to sound like a presidential candidate. A little sip of water. And we're back in business. 2-year U.S. Treasury notes continues. I was just mentioning that because of the coughing spell. That's all. So if I'm correct, and I kind of did this in a number of different ways, my thinking here is that within the context of the yields, the 2-year, it's sitting on the monthly. No, I'm sorry. This is the Treasury note continuous contact. This is the actual 2-year note. It's not the yield. It's the two-year note. And what we're looking at is the 109.03 level, where it's at, is on the monthly chart. This is the second trading day of the month. So all I can say is you had 2 down months, went to a record high. I believe that has to be a record high. Whoa, this goes back. So let me just squeeze this closed. Oh, look at that. This is the 2-year yield. Back in 2000, this is the 2-year note, or whatever they use. Back in July of 2001, it was in the 85s. It's now at 109.03 at all-time highs. Oh, I have to tell you, I'm so pleased I came across as one of my frequent emailers during the show asked me about this, and I never ever looked at it before. It was a first. At least I believe it's a first. So, peak C. There's no real alternate count for this in the weekly. So everything's upside down here in the Chapman wave methodology in the 2-year U.S. Treasury note. But what I am saying very quickly is that the note itself, not the yield, the note starts to see the yield go up sharply if it breaks a 109.03 and closes under 108 in the next 2.5 weeks. Just want to make that clear. Now, I almost forgot. I wanted to do this. I've just got a kind of like a single leg A to the upside is really a B in that big spiral we had earlier on from the opening bell from the 8:30 time frame. It's actually 8:20. It started to move a little bit higher. And what I'm looking at here is that, and now let me give you my overview. I do want to quickly, if you don't mind, because there were questions about it, and I did start to get to the questions. When I'm looking at the GDX, nice spike, a gap up spike, it has to hold. The way I'm looking at this, I think my weekly chart is really the benchmark, and it's saying that the gold miners, and I'm going to go to the GLD as well, and the GLD as well as gold, are all suggesting that there should be a little bit more of a decline in gold. I'm saying a little bit more because of the really good action in the monthly chart, but it seems to me that this rally could kind of fade. And if it fades, I'm looking at key support at 1,300. And if that 1,300 support goes, my target would be 1,283 on gold. I'm completely wrong if today's Friday, by Friday of next week, gold has had a spike that goes over 1,365, 1,368. That I'd have to say, you know what? High-level consolidation continues. It's not pulling back deeper. That's just the way I'm looking at it. And if you look at the DZZ, that's the inverted, the two times gold. It's a double short on gold. You made that peak D, but actually the weekly chart is showing that there's a little bit of strength here. So just, if you don't mind, I'm going to be a little fuzzy on gold, saying that my reading is that gold should still come down a little bit more, and we need to go to the dollar and see that the dollar is not fantastic, but within the up channel in the weekly chart, it's held and it's above the 9-period moving average. So there's a real good chance that the dollar has a little bit more strength. Now, I wanted to do this. This is the 10-minute. This is what I use. This is the 5-minute. S&P cash. I was going to pull up the other one. I'll pull it up in a minute. But the 5-minute, the 2-minute is really what I wanted. Here's the 5-minute. You see this H pattern, the lowercase h that I call the dreaded H pattern in my CD introducing the Chapman wave methodology? Well, we're taking it out. And that says that within the next 2 bars, I'm going to give it a little roll, maybe 3 bars, it has to close decisively above 2179.66. This is the cash S&P, the SPX or the SPX.X, however you get it on your platform. And if it does that, you might be able to make another H pattern. But if we close decisively without closing, we can pop up above, but you mustn't close below 2179.66. If you do that over the next 2-3 bars, I think that's a problem. So this is the cash. Let me go to the 2-minute. It'll be much clearer for you. Where is that 2-minute? Disappear. Don't disappear on me. I need you. I put it over there. That's right. It's behind this. There it is. So here's the 2-minute chart. You'll see there's that H pattern breaking down. We made a peak F made a peak D in the cash 5-minute and a peak F in the 2-minute chart. And it is pulling back, and the technicals are kind of weak. I will see if the 2173 level is going to be hit in S&P Mini. Dow's up 79, S&P's up 8, and I'll give you my overview as soon as we get back. Thanks for being here. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member, FDIC, and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so now let's do this. I want to get to, let me just go. This is the VIX index. It looks like it's made a leg B up, and my contention, and you'll see what my contention is as we go through this one step at a time. Let's get this back again, SPX.X. There it is, and get out of that. Okay. This is how for my subscribers, this is what I've been doing. I have a new technique. It's been a technique that I've been refining for, I'd say a year at least. I initially took the Elliott Wave 5, and just to make it simple, Elliott Wave 5 from the X low to leg 1, completion, wave 1, let's call it, and then wave 2 down should have what we would normally call A to B equals C to D. So that second rally, which is wave 3, should at least be 1-to-1. So whatever wave 1 is, after you get wave 2, if it doesn't break the low and it doesn't restart, basically, you want to see an extension that is at least 100%. Then you get a pullback, and that pullback should not take out the high of wave 1. It negates it in the Elliott wave. And it should go to wave 5. Wave 5 can be, doesn't have to be. In fact, a lot of times it isn't. Wave 5 could be the extension that really breaks the bank. That's the one that just soars to the upside and gets everybody in, and then it pulls back very, very sharp. That is it. It concludes. I have used a different technique. So in this case, if I do this with Elliott Wave, it doesn't quite work out. So I'm going to just say that I have to call it, I have no choice. I call it a Chapman Wave inspired by Elliott Wave. So it has very little to do other than there are 5 waves. And if you look at this, the 120-minute chart, we had a perfect Elliott Wave, and it turned out to be a Chapman Wave going to 5 up at the 18,622 level on the 20th of July. It pulled back in 5 waves. Now, this is really not exactly Elliott Wave. So it pulls back in 5 waves, comes back down to the 18,247 low of, I think, August the 2nd. I should type that in. Yeah, August the 2nd. And then it starts, and that's 5 down, another 5 wave to the upside, and it goes to 18,668 on the 15th of August. And then it pulls back. I initially said that I think I've got a 5 here, but then I said, no, I'm going to move the 5 to here. And that was 2 days ago. Yesterday we got there. Now I can squash the chart so we can see exactly what we're talking about. And now what we've got is that 5 then went to a recycled leg D to the downside, perfect for the Chapman wave. We had an arch formation with the left hand right side price time match with a bar that I chose as the midpoint, the fulcrum, the plumb line, and you went from the 18,247 level up to the top at 18,668, which was not the exact left side right side price time. That what was closer to it over there, the pullback to 18,335 on the 26th, going to the base over there. But going towards the 18,247 level, what I'm looking at is that everything's been met, and it came in 3 bars late, and it was higher. So my thinking is that there's going to be a bounce. And this might be Elliott wave 1, or in this case, call it Chapman wave 1, because this was not an Elliott wave at all, because that bounce there broke the trough of the leg 1 down. So Chapman wave 5, but I'm considering that this is going to finally be a failure pattern of the 5 waves. This is my thinking right now, right? Although it could be the start of a brand new move to the upside, but here's my thinking. I'm going to go to the Dow chart, the daily chart. And the daily chart suggests via the MACD and the slow stochastic that, yes, we could get a bounce, but based on, actually, I'm going to do it this way here because I want to be as clear as possible. Based on, let me go through this, INDU, based on the Chapman wave methodology, I did it in the wrong place, INDU, we've got a peak E in the Dow daily chart, and it's a sell mode. This hasn't changed anything right now. It's not changing it at this particular point. I haven't got anything to say. We haven't been stopped out of our short position. And in fact, we add a little bit, but that's besides the point, because the point here is that we've got a weekly peak E, and the stochastic is just dipping down. It's at 91%, and the MACD is good. Nothing there yet. But this is where you can expect a deeper pullback. That's number one. But if you put it together with the S&P, I can do the SPY, but I'll do the S&P right now. Peak F, right there, 2191, 9381. This is also in a sell mode. The MACD is still very negative, and the stochastic is not that great. But the weekly chart has held well, but I've got all the signs, all the signals. I've got like Chapman wave 2-bar, double top. I got a whole bunch of things going on that says, just be a little careful here. It looks to me like we're going to be pulling back into next week. Okay, why? Look at the Qs. The QQQ made a peak E at 118.01 in the daily. I haven't even got a sell mode yet. I can't put the down arrow until the end of the day. And the weekly chart is holding beautifully. And this is the thing that says to me, okay, in both the weekly, all 3 weekly charts we've looked at so far, the MACD and stochastic are really strong. So it's going to be the daily that pulls it down. And I'm thinking maybe we just need a little more time, not that much in price, but a little more time to go sideways. What's going to be the trigger? So I'll show you. We were waiting, Peaky in the den, and he said, wait a minute, we haven't got D in the Russell 2000, and I said, we should get it. We've got a C1, C2, and he said, he reminded me that I often make the case that a peak C1 with a slight failure to make a peak C2, which I treat as a peak D very often, or a warning, very often concludes with a D. And there it is. We got the D today. So all the little duckies are lining up. We've got leg D still in the weekly chart. That means you've got to wait the whole of next week without a new high before you can even get a peak D. And if I'm looking at the New York Stock Exchange, I wanted to add that. I want to go through the different indexes to say that I've got some signals saying that the near term is a little bit vulnerable, not overly vulnerable, but a little bit vulnerable. We've got a peak E in the New York Stock Exchange on the 23rd, and pop up today, and the weekly chart is holding very nicely. So all I'm saying is there are areas that seem to me to be working very nicely. The XLF, I've spoken about that before, it's working very nicely. I'm a little concerned that some are starting to show that they don't have the strength for the upside. And that's saying to me that this is an emotional pop-up. I got it it was not a surprise to me that we did go up because of that Chapman Wave 120-minute chart. The big surprise to me will be to have a whole new 5 on the way up in that 120 minutes, 4 in a row, or 5. It'll be 5 in a row. That's really unheard of. So not unheard of, but it's really unusual. So my thinking right now is that if you put it together with the bonds, that there's going to be a little nervousness. There could be that maybe bond yields will do its own thing despite the Fed, and that we will be looking to see if bond yields are going to go higher, or if in other words, is there a change of scenery? Are we going to get something happening in bond yields that is very different to what we've had before? And will there be some nervousness in the market? When I get back, we'll talk a little bit about the VIX index and what I'm anticipating at least. Be right back. Basil Chapman, the Dow is up 85, S&P's up 8.40. Hold tight. We're on our way to coming right back. Oh, fabulous TFNN.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I had a question about from someone who wanted to know if anyone knows of a free paper trading platform that he could use to experiment with, and I just thought I'd throw that out. Just let me know, and I'll let him know. So this is the E-mini 5-minute chart with the resistance right there, 2180, support at 2175.90. Of course, this doesn't know that you're trading quarter point increments, and 2176.05. And you can see the MACD is still bad. The on-balance volume is pulling back. The stochastic is pulling back. It's at 21%. If it starts to go to the 18%, there's a good chance that this will not conclude until it gets to the single-digit percentage, which means that the Dow will give back a big chunk of the gain. So this is a very important moment. Now, I said I would go to the VIX index. Let me explain what I'm looking at. You had a question in the, I think it was Mike, about the VIX. If I'm looking at the volatility index, I'm going to go to 120-minute chart. This decline that we just saw that went to a lower low, and we're seeing a series of lower lows and lower highs, is saying, and that is an A, B, C, D. Let me just put it in here for the 120-minute chart. That is an A because the low was, well, I sometimes use the low as the bar of the high if it's in the middle of something, of like a rectangle, just as a heads up to say, yeah, you might have got to a D. In fact, that should be a C minus because it went to a lower low. But it's just giving me a sense that there was a conclusion. And now we're at a point where there was this sudden decline. And I'm thinking at 1253 that the VIX index, in fact, has a chance if it can get 1253. If the Dow at 80, up 81 is actually only up 53 points in the next hour, and the S&P up 8 is actually only up 5.75, the VIX should actually try for the 1272 level. If later in the day it goes higher than 1272, then we'll probably close at the lows of the day. I'm not sure yet if that's the scenario, because it is the weekend and a long weekend, and what you often have here, I suspect fund managers were all in touch with their offices. Maybe they were at the beach, but in touch. And at this point, I make the joke always that on their boat, there is no captain. Everybody is away for this long weekend, and the only one left is maybe the chef because there's no one to cook for. And the chef is told, whatever the market does, follow it. And now what we've got is that novices are running the boat, and the funds are, you'll see there'll be quick little moves to the upside and then it stops dead. Quick little moves to the downside. So I'm thinking if this could all be part of a lower highs and lower lows scenario, you will then see the VIX rally a bit more. But make it simple. VIX at 12.46, you go to 12.20, not you. The VIX goes to 12.26, you've got to be a little bit careful, because then the market could suddenly have a bounce, because this is not bad news, it's not good news, it's just kind of, it's news that is building up. It's like a seed is being planted, and now you're getting all the shoots, and you're not quite sure which shoot is going to be the strongest one. And that's the way I'm looking at it. So the VIX is key because there could be a rally towards the latter part of the day. If, in fact, the market holds really well, people will say, hey, I don't want to go into the market short on Tuesday if the market suddenly springs to life over the weekend and the foreign markets are up, etc. We'll see what happens. Okay. Now, I'm going to take the opportunity to do a couple of things I want to say. We've got a Tiger sale. Now, the Tom's Gold Report, 750 editions, fantastic. And to go with that, there's a special going on. But also there's a special going on just this weekend. If you're not listening, you won't even know about it. It is a special that says you can buy for Tiger dollars. You know, one of those fantastic deals we do here for Tiger dollars, that's what you're going to be looking at. So take the opportunity. Tiger dollars coming up, starting right now into the weekend, maybe stopping on Tuesday. If there's any newsletter you would like to subscribe to, you've not had a chance to, and you want to, or you have a subscription, and you say, hey, I like this person's work, I want to add to my subscription for a bargain price, go to the front page of TFNN. Now, this is what I'm going to do. I'm going to run some of the index. Look, the XLF, nice action today. I don't think it's great action. It is a leg east. This is another reason why I'm a little bit cautious here, because you've just made a high of 24.64. Let me just change that number right now. I'm just going to, 24.64 at the moment. 24.64 in leg E. And you haven't got a peak E. You have to wait for a lower high bar. The MACD is good. Stochastic is great at 91%, but it's just starting to pull back. The weekly chart, I never knew that we would get to this week here. There's 2 weeks we got to go to get to 24.89. So the financial ETF acting very well. A, B, C, D. Is that a D? Let me make a note. Yeah, yes, 2464, 2464. It's peak F, peak G/C. Okay, so the 120-minute chart is also saying, be a little careful here. Couple of things going on. Financials, I don't know what the relationship is with no bump up in yields officially, but I think we're looking at a sector that's saying, hey, we kind of like what's going on. And as far as that's concerned, it's acting very well. A question in the den about Melly. I have not looked at Melly for I don't know how long. I used to have it all notated, but of course now it's disappeared for some reason. Melly, which is Mercado Libre. And that is, whoa, what a big spike. Well, I have not looked at this for ages. The monthly chart looks good. Who asked me about that? Peaky, okay, nice. This is, yeah, you always have to go back to the lowest low bar if you're going to do your Chapman wave count. Let me do it quickly. Here we go. Melly, monthly. The lows in July are somewhere in 2008, right? So here we go. A, B, C, D, E, F. Oh, not a G, F. A, B, C, D, A. Oh, sorry, that's a B. A. What's your objective in the Chapman wave? To get you to at least a D. We're in D, but what a strong D. Oh, my goodness. This is very nice action. I never even looked at them. Who knew? And the weekly chart is in leg A, B, C, D, E. Leg E, very strong E this week. And a huge gap up on a Friday. I'm always nervous about a gap up on a Friday. It's like it was news-related, and that always makes me a little bit nervous. And just remind me again, Mercado Libre, is this Spanish? Libre, huh? A, B, C, D. And we've got an E as well. We can call it an E in the daily. You know what? If you're long, I wasn't even looking at it. If you're in it, I'm just saying fantastic. Congratulations. That's number one. Number two is, this is saying that it's raising the support and making the 163 level in the weekly chart, 9-period moving average, really important because it's way down. It's 12 points lower. So this is a little extended, but I have to then go to the daily. And all I can say in the daily, yesterday I would have said, watch 172.22 to 170.11. And today I have to say, uh-oh. Now it's the low from the gap up. Big, big low. 176, and we're at 185. So 9 points. You've got 9 points of cushion. I think there's going to be a Chapman wave inside wedge, 120-minute chart to follow, A, B, C, D, E. This is E. And I would put 183 to 189 as the trading range over the coming 3 weeks. 2 weeks, maybe 2 weeks. And then it should pull back and then make a little inside A, B, C, D to the top. I'll be back, Basil Chapman, and the Dow's up 82, S&P's up 8.5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, just wanted to show this chart again right there. We've broken support level underneath the 9-period moving average, but the stochastic factors are attempting some kind of a bounce. So what's most important about this technique is if you look at the rally in the technicals and see that the price didn't move higher, when it pulls back, and you see there's a little brown line just above the maroon line, that's saying, hey, there's still a tremendous amount of resistance there. That's the resistance to pierce. This is a 2-minute ESU. All right. So, Gigi, I have to congratulate the art of the charts, the software program that Dave White put together with using Tom O'Brien's techniques. Nice pick. He had GG as at least a bounce candidate. GG's gold call. Nice bounce for gold call right here, up 36 cents at 15.97, having hit 15 yesterday. So that's a very nice bounce. Question in the den, and then I've got a bunch of emails I want to go to. That was a good question. I don't want to miss it. Melly, I did Melly. It was a gold stock. Someone asked me about gold. Oh, did it just disappear? No, I'm sorry. I'll get to it. If you want to, that question on whatever gold stock it was, if you want to put it back in. Oh, Rand Gold, GOLD. That was, is it down in the den? GOLD's Rand Gold. Rand Gold, nice bounce off the 200-period moving average with a Chapman wave silent candle right there. I still don't think it's done. I think bounces, you want to play bounces, but I'm not sure I want to get into positions right now in gold. We're stepping aside from that area, all right? Question, okay, here we go. Travis wants to know about NVIDIA. Let me have a look, because remember, that's one that I said, we had a call, and I said, don't short it, don't short it. Anything can happen. It was way back, I think it was somewhere around, it was like in the 58-ish area, 55, 56. And it screamed up to a C. It never made the D. It went up to right there, 63.50 on the 15th of August. I'm actually talking about way back. This is way back. This is, I think it was July I had the call. And then what happened was we had to wait. Now the high is, what did I just say, 63.50. Today's high is 63.58. So, yeah. Hi, Basil. I just went short this morning in NVIDIA at 63. Do you think a pullback to 60 would be a reasonable level to try and cover? I'm targeting that gap from the most recent report. Okay, so I'm looking at this. I'm looking at a double top, and then it makes a triple top potential failure pattern. So this is what I always do in the Chapman wave. I make it as simple as possible. To tell you the truth, the more complicated you make any technique, then the more chances you have of saying, if this or if that, and if this, and oh, if that. So I just make it simple. This is a C1, C2 right now in the Chapman wave. I'm going to remove this. It goes peak C1. Second top is peak C2, slightly below. Second top is C3, still slightly below. So that says to me, when I've made 3 of these tops, there's a much better chance that if there is a sudden spike to a D, it's just going to be very brief to complete their move and then pull back. It won't start a brand new move. That's my thinking right now. The MACD's weak, stochastic's weak. So finally, you've got a high, and on every high, look at this. This is NVIDIA trading at 62.45, down 70 cents. Hey, nice pick there, right there. Look at that high. Look at that high, and look at this high from yesterday. Each one has seen lower technicals. The monthly chart and the weekly chart are still very strong. The 120-minute chart says good eye, because that was a perfect place to short. Now let's look at the monthly. Based on the monthly, I would say that this is just the start to see if NVIDIA is going to start to have a consolidation. The flat top suggests to me always that I've got to quickly, without even thinking, I grab my toolbox and I go rectangle formation to maybe, I'm being a little generous here, I would have taken it to, I'm going to take it to the 58 level where the 200, where the 9-period moving average is. So the answer to your question is you've got it in place. I'm just going to say to you, Travis, all you need to do is make 63.01 your buy stop and let it tell you. You've got everything here that says your pick of shorting, your timing has been perfect, but that doesn't mean to say that you're right. It's been perfect because it pulled back immediately. Now it gives you a cushion. My thinking is that it should make a U-shape, another U-shaped pattern, and that it should test 61.20 to 60.83. So let's leave it at that. Nice pick on the day. Day is young. Let's see what happens. I think you've got this as a potential triple top in the daily, but triple tops can make another U formation. So a U formation should be a word. It isn't a word, but it's a U formation. There you are. Okay. Now the next question is, Bob wants to know about XOP. Let's go to XOP. XOP. This is the oil service, oil and gas exploration. Okay, so let's go to this. I don't want to do a peek. You see, you always have to go to the left side to see if you're correct in picking your low bar. Yep, that's the low bar of importance. And now we can go A, B. So now you can see why I'm a little bit cautious right here, thinking that so many indexes that are quite important right now. I'd say the oil service and gas is important right here. Has made a peak D, but nice rebound today. So the question is, oil exploration and WLL, what is the question? Wave count. Okay, so the wave count is a peak D in the daily in XOP. We're still at a peak D in the weekly, but you could make a case for A, and gray B right there. Oh, no. It made a high of 38.28, and today's high is 38.17. No, I mean this week's high. So yeah, gray A, gray B is make. I don't think I'd be short. I would not be shorting. No, I just would. No, the question wasn't to short. I like it. I just don't know at this point if I'd buy it right here. Oh, this is tough for me. I'm going to wiggle out of this, and I'm going to say I need to remind me on Monday. Let me do some work on it. I mean, there's nothing bad about it. That's the reason why I wouldn't short. Yet I do think that it's got a limited upside, limited downside just for the moment. So give me, I'm just going to back off and say it's one I can't give you an answer to. I don't feel comfortable. Bank of America, let's go to Bank of America. Bank of America's question from Bob. Yeah, you see, this is another one. F/B has a characteristic right now of a possible F because it had a red candle and then a strong red candle yesterday. But it's holding the 9-period moving average. This is a sector I like. No, I would not be shorting any of the bank stocks or the XLF. Let's put it that way. So would I be buying? Let's go to our Goldman Sachs. That's the one we like to use. Yeah, Goldman leg G/C. No, I like this sector. Be selective. They're all looking quite good, in fact. I'm just going to say I like it. We are long. I can't remember now. I don't know if we were able to add today to our position. I don't think we were. Let me just have a check. So XLF one more time. I don't remember. I'll have to just check. What did I say? I said, now we'll wait. I wanted to wait because it's a leg E. I'm in no rush to add to the position just yet. We have a position. So I'm going to be watching it. There's that beeper, and I couldn't find my switcher for that thing. All right, well, tough luck. As we're going to the break, folks, the Dow is, let me show you that chart again for those of you who are trading, right there. Had a little tough effort, tried to rally, couldn't rally above that 9-period moving average. This is on the S&P cash. I'll be back. Basil Chapman. Dow's up 78, S&P's up 8.30. Be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Oh, folks, we're back, and let me just, another good question came in. Sarah wants to know about X. Let me just run these. Yes, XME, it's out of balance, it's fading again. XME is this, why is this the notation here? A, B, C, that was quick, D, E. Made a peak, E in the weekly. Okay, and all of these are E's and F's and D's and the weeklies. I just think the weekly needs, all of the weeklies need a little respite. So Spider, S&P, metals and mining, that's what we're looking at. Question about X, which is US Steel. Failing. I'm not interested right now. It's had a spectacular move. It needs time. I'm not even looking for a little while. Alcoa, same thing. Needs time. And this is here. Look at Boeing. Boeing had a balance. Oh, I had a quick question. Let's do this. Chapman Wave, Dow, I call it my Dow Quartet Index. There we go. G. Big spike up this morning, but it hasn't taken out the top to make a leg D above 31, around like 31.57 or whatever it is, above peak C. Nice move. It's a good move because after yesterday, it was not very good action. So at 31.37, up 17 cents. It's saying, yeah, okay, the weekly chart says, oh, hum. This is just a consolidation and kind of fits in with what I'm looking at in the market. IBM right now is up 67 cents at 160.21. If this was going to be a major break to the upside, I'm thinking IBM should be moving much. It should be up 2.20 right now. It's not. And the weekly chart says, yeah, I'm sitting on the 9-period moving average, but I'm under the 200-period moving. I need a little rest, okay? That's Triple M. I bet it's up. It's up 52 cents. Gave back. It made that peak D, a leg D that we were wanting. It's gone to D in the daily now. And the weekly chart did not make a D. It needs a little more time. So we're watching Triple M at 180.50, up 52 cents. My final one, UTX, failing. It bounced and now it's given back most of the gains, only up 18 cents at 106.90. Peak F in the daily, peak E in the weekly. I have to tell you, I cannot change. I haven't been able to. I've tried my best all night. I was sitting there this morning. I spent hours and hours just going through the different charts and saying, what is needed to get to really, at this point, initiate a new buy mode to go to new highs? I just don't see it right now. It could be next week, maybe Tuesday, Wednesday. I see something differently, or maybe by the end of the day, there's the Dow's up 135 and the S&P's up 13, and I say to myself, okay, maybe that's good action. So that's what we're looking at right now, and I just want to wish everyone. I think I went through all the questions. I'll do one quick refresh right there. Refresh and see what's happening. There we go. Free delivery tonight. Starbucks, nothing there. Okay. Final call. Winston Flowers. I don't know what's going on. Okay. So now let's do this. The VIX index. VIX.X. The VIX index is at 1240. I told you if it goes to the 1220 area, 1225, I think I said, and the market actually rallies sharply with that, that's just saying, hey, be a little careful here. I could be wrong. So far, and the weekly chart so far under the 9-period moving average says, hey, there's strength in this market at this particular point. Let me go through this one more time as we're about to wrap up. Here is the 5-minute S&P. We've made the peak A. It's trying to rally. I bet the stochastic and MACD are turning up a little bit. I've got very few technicals here, but you did fail in the H pattern. I'm watching this carefully. It just would not surprise me if we've seen the high of the day and we're just going to make lower highs and lower lows and then kind of stabilize a little bit, maybe a little bit of a pop at the end or maybe a slide at the end. But I'm looking at this as if to say it's part of the pattern that I've been looking at here in the 120-minute chart right there that says that this should be a single leg A up and it should fail and we should start to come down. Let's see if that's the scenario we're looking at. Meantime, I'm still looking at some long positions, still looking at shorts, but we didn't add stock shorts today, just on index short that we added to today. Hey, folks, have a wonderful weekend. See you on Tuesday. Check out my opening pool. Go to the front page of TFNN. Check out the specials, and I will start sending charts out first thing tomorrow morning.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.